Good afternoon and welcome to another Traders Community podcast brought to you by traderscommunity.com. More volatility today and more classic moves. But before we get into that, we got the glorious Madavi joining us. And look who's come back out of the metaverse. We got Meta Johnny here. So we've got a bit to talk about. Lots of central bank activity. More central banks raising today, more silliness out of the US energy policy. We had Adobe after earnings with another bit of a destruction party, but we had some really big moves today. Really the only index not in bear market territory in the US at this point is the Dow Jones. I think it's down 17% or so. Bonds became a bit of safe haven on the 30-year as far as the curve goes, and gold and the Swiss franc, same thing. Remember, though, before we get into it, this is not financial advice. Do your own homework, do your own research. We're just sharing what we see, what we know, what we're doing, strategies, and what other more on the pro side, I guess, for want of a better word, are doing. Remember, gamble responsibly.
I'm so happy, mate. I don't want to be paying the pro fees.
Yeah, that's why I said pro-like. But so let's see where we are. So to fill in, and remember, this is all if you just go to the website, you'll get all the data and everything. So that's happened today. So all the energy markets, commodity, forex, stocks, news, where we all finish, right? So if you miss or you need a translator of what we're saying. So the big move yesterday, we went through how that was a typical bear market rally. Most of the big guys were out. They come out at the end of the day, or they basically have orders on to re-short or rebuy, whichever way the trend is. We know it's a bear market, so we know which way they're going, and we saw interest after it. And we've spent many times in these bear markets, a majority of people are long or haven't seen bear markets. I see constant messages I get all the time. It's a great level to buy, great level to buy. This is it, all the way down. They constantly do it. And particularly in things like FibTwit or other dribblers like in CNBC, Kramer, people like that. They very conveniently forget all the way down they're being long, right? And you can pick them out. They'll always hang crap on other people and all that. So as I've said 100 times, be wary of them, and hopefully you've been listening. So it'd be good for your financial health. Anyway, we dropped out of that today. Remember, that was a perfect sell yesterday in all the setups. So I hope, and you're aware of our longer term strategy and positioning on that. So let's look at where we are. Oil bounced all the way from the low 112s back to 118 today. So $6 rally, while everything else is getting wrecked. Obviously, the energy policy is the shortest thing to the worst disaster. I think I don't recall it. I mean, you got to think to be this ignorant and stupid, and that's me being nice. You're doing it intentionally. So just a quick run through on that. Yesterday, a letter goes out, or the day before, I can't keep up with it, accusing all the oil companies. A letter specifically to Chevron, Marathon, and Valero, right? The refiners. The ignorance is unbelievable, because you can go on about price gouging all you want. I forgot you represented the US government.
What are you complaining about?
I know what he's saying, but it's not, because basically look at how much tax punters and dribblers go into to it. And I saw a good post from someone in England or Ireland that governments actually make money out of high gasoline prices more than anyone, right? So don't ever, and in a government that wants to raise taxes or lives on other people's money, like we have in the States, 47% pay tax. I think Johnny knows better than me on that.
In California, I think we pay over $1 a gallon tax.
Right, but the people that pay income tax is less than 50%, right? 47% of income earners. That's some shocking number. You pay over $1. I think you may pay even closer to $2, right? Yeah. So, I mean, that's a lot of money. But the point is, it's all about increasing production and, refining. Well, we're running at 94 or 96% in the Gulf state.
Don't forget, we have a special blend here.
Yeah. Well, so that's even more taxes involved in that as well.
But nobody else is special like us.
Yeah, special, all right. Short bus city. But anyway, I can't say that anymore. I apologize. So and it's just mind-boggling, the whole thing. And all it's doing is creating more aminosity, making us look really foolish, blah, blah, blah. We all know that. Anyway, moving right along. So it's all about energy. It's all about America's fault, the American producers' fault, sorry, Russia's fault, and Iran's fault, right? So as Madabi mentioned yesterday. But lo and behold, today, as they've just blamed America, they come out and put all these other sanctions on Iran. So that deal's gone. I mean, not that it was ever in play, right, mate? But
Biden.
I mean, but you were mentioning how he wields his big stick, and it's meant to be a democratic, free-thinking, combine all the people, everything's going to be different kind of deal. So you can see what the oil market did in response to that. So natural gas, a little bit different. As we know, that's a massive thing, Freeport LNG. It's holding up there, 740. It did have, and it came out right as expected, its EIA number. As far as stock markets go. So, just to be clear, if you're wondering why yesterday was an anomaly, 6 of the last 7 trading days have been down for the major indices, right? And we don't want to labour on them too much. We'll go through them a little bit individually. The Nasdaq right now is trading 11,171. It's bounced 130 handles off its low. The Russell, the dribbler 101, is 1655.15 off its low. The S&P is 3677. These are cash levels I'm giving you. 3677, 30 off 3640. Vol, it did bounce off yesterday's low, 29 to 32, but it still doesn't feel like there's a lot of fear. And a great example is the way the dribblers and punters probably bought the crap out of Revlon today. Symbol REV, who got halted yesterday at like 240 or 250, declares Chapter 11 bankruptcy, opens at like a 125, and then runs to 306. Bankrupt company, Chapter 11, has to go through organisation, has to be approved. We all know that story, right? So,
company, French, iconic.
Yeah, Macron. Rumor has it Macron's a big customer, but we won't go into that.
That wouldn't surprise me one bit.
So let's have a look at SPOOs first. So SPOOs, we'll start with the 5 minutes. We just sold off all day. You had a couple of little bounces where we trailed out and covered and got back in. I think this was it. And at the bottom line, they were good technical levels. This is a 5 minute. But you can see it's just safely drifting down, which gives you an idea how many people got caught yesterday, right? And a lot of them are people that won't listen to you or to any common sense, probably buying Revlon. Shouldn't joke about it, but we will. But in a serious note, what changed yesterday? Well, let me tell you what changed. They confirmed a 75 basis point rise, right? Talked about all the problems. In other words, it got even more problematic. The other thing today, we had the mortgage rate at the highest since 2008. What happened in 2008? We then had the other big thing that shocked the system was the Swiss Central Bank, and this is all on tradescommunity.com. You can read the stories individually. Raised rates 50 basis points, putting it from minus 75 up to minus 25. Still negative because they've been negative there for 7 or 8 years because they're trying to stop the French franc going up. What that did, though, it put a bid in the Swiss franc, which then flew into gold and then right across the spectrum, right? So safe haven. If you look at the yield curve today, the strongest in the curve for the US was the 30-year. So futures just open up. So you've got this sort of situation developing, and it shouldn't be a surprise, right? None of this should be a surprise. Anyway, so that's what we did. We got down to these lows. We're still battling with these lows back here on the end of March, or start of March, sorry. So that's, you can see what we're flirting with, but we're under it. We close under it. Tomorrow could be or should be a very big day volume-wise. There's 3-point-something trillion worth of gamma expiring in the options tomorrow, right? So keep an eye on your OIs, those levels on individual stocks, on indexes, and the like, okay? So there could be some really big market. Liquidity is really thin, and that's why you're getting these silly moves. Okay, so on the weekly, you can see even more significant what it's doing. So on the week, if you're a bull, we need to recapture this low from 36.70, right? You need to recapture that, or is actually sorry, 37.26, something like that. You then got your next chance is down here, 36.48, right? See all that, everyone? So right now we're 36.80. We're just hovering above that. But you can see again. This is all off the tankin where we reloaded 2 weeks ago now. This is probably the third week. So this short went on 41.71 in futures. So it went a little. So that's right from there. So it gives you an idea if you've got discipline and a plan. That's up 530 points, right? That's S&P points, all from a strategy that's mass-based and everything. So, right, you control your risk. Okay, that's all we really want to talk about that. You know your levels. Very, very clear. So have your frame up. Use your 5-minute or the hourly, something shorter, but you know your other strategy there. And don't get caught bull and bear over. Once you start doing the gambly shit, but this is this simple. The guys that really, or girls that really make the big money, have a strategy. Don't flash it and don't try to get every move. You try to get every move. Each time you do that, you can increase the risk of losing, right? Slippage, anything, time bomb, news bomb, whatever. So keep that in mind. That's why we keep it the way we do. Hopefully that gets through. Okay, let's bring Madavi on and talk about the Nasdaq. Here's the weekly. And you can see just accelerated lower this week. That's that gap at the start of the week.
Well, today was the treat of yesterday. Yesterday, I thought it was crap, that run up. I thought it was just a hogwash one. So I just sat on my hands with a nice little position and enjoyed the fruits of my labor.
Right.
That's all I did today.
And so that's 100%. What we're talking about, you have a strategy and it's working, but it doesn't say you just sit and forget.
Too much because I didn't want to lose. Every time I do that, I get chopped around, or I start getting. I lose every time because I get in worse prices. So slippage. I didn't want to get out of slippage, so I mostly try to stay short the whole day.
Right, and that's what I'm talking about when you do too many trades. Now, so we're talking about Nasdaq has more slippage than the S&P. S&P you can do a little bit, but keep in mind the only time I do them, unless it breaks something with some news, it's generally going to be minus 2/8, minus 3/8, that sort of scenario. It's all going to line up, right? So very timely. But if you start playing the poker machines, the red and green game, pressing buttons, you know where that ends up. So. So that's the daily chart. You can see it's under minus 2H, which is oversold, but look at where it came from. So you got to look where it came from. It only got, it's actually just sort of 7.8. So this minus 2H is equivalent in a squared market to minus 1/8, right? So just keep that in mind. So that gives you more room. 5 minutes is what my dad was talking about. You did have this little bounce here. So it went a lot more than the SPOOs. It looks like it went about 150. But all it did was get up to that cloud and get given again, right? And so look what it was. Notice on Nasdaq, I don't know why Nasdaq has this peculiar thing, but it gets just under 7/8. It's 8/8, where it's not as clinical as the others. So I do know why it is. It means it's more speculative and more weaker, right? And a lot of people are all one way, so there's a lot of heaviness or overhead supply, whatever you want to call it. Okay, let's look at energy, because we gave the US energy policy a bit of a blast, and you'll see why. I mean, and it just concerns me that we have no policy, basically, other than not admitting errors, right? And trying to blame others rather than get it. And it's not rational. So here's oil. Look at the technicals. Right to Cajun and right to the plus 1/8. So it was perfect there. And then it was coming up anyway on that, right? Just normal buy coming into it. Remember, this market's thin. And then we got the news on the sanction stuff. It really just needs any excuse, right? So there you have it. And also, of course, the currency stuff. So the US dollar was weakening, right? It's against the Swiss franc in particular, but across the board. So that also made for higher oil prices. If you look on the weekly, look what it did. Same thing. Our little yellow line there, which you recall, is plus 1/8, right? So I held that, and we're right. So we're going to watch what this does. But you can see what's going on, a combination. Now, this is the last one standing, so it's at risk. So I think we made a great call last week to take profit on your oil stocks, because they'd got ahead of this. Way ahead. That Exxon stuff at 104, last time I looked, was like 97. EOG, the shorts and plays you put on. Remember, some of these are shorts, some of them are just taking profit. And if you did keep the call, it was selling calls, buying puts. So you want to do all that. But when you got the dribblers talking this, the same guys that laughed about oil and energy stocks, were all those dribblers talking about it. Kramer saying stuff like, it's all you can buy. Or people saying, well, you got to be in something that may have been energy. You know it's top heavy. And remember, this is a 3 or 5. It's really that simple. Natty Gas had their EIA. It is Thursday. Nothing really there. You can see it's broken down. It held this 5/8 on the weekly. You got your Cajuns down here at 660. If you go to daily, where is daily? Daily. Remember, the weakness of this is we're working out to see how much is LNG. So we're sitting, it looks like we're building another pennant. We're under that 500. All this churning in the cloud, right? Same levels. Here's at 660 down here that you saw on the weekly. Okay, we want to look at gold. Gold had a big move today. So firstly, copper. Copper's got this double bottom in play potentially. This is a weekly chart at 40, just over $4. See that? So the trouble is with copper, this is all about the economy as well. And people are aware that the gluts will start building up. It's not as tight as what they make out, right? And that's the danger oil has if demand keeps coming on. So that's your copper. We'll see from there. If it does bounce, you got your cloud right here, 418. You got the bottom of your channel down here around 397. And then 8/8 is right here. So 390. So that's what that's doing. Again, just like oil, this is a 5 or a 3, right? So keep that in mind. Okay, let's look at Goldilocks. Okay, so gold is still doing that same thing, right? It's come down a couple of times, tested this breakout, bottom of the cloud. Today was a strong rally. It was like $30, I think, Madavi, right? And It got back over the 50. So it needs, if this thing's going up and this becomes an ABC, right? This whole pattern, it needs to hold this 50 and get over all this resistance. And if it gets through that, that would mean that would be impulsive, like it would be hard and fast, and it would be, as you saw with the Swiss franc. Look at the Swiss franc. That gives you potential of what this can do, right? Silver, I'm just not a big silver fan, and I don't think you are you, mate? It's kind of like, it disappoints. Look, there's times when you can get it because it's cheaper to gold and it'll have a good run, and if you get that, but it really struggles all the time. You can see it in this pennant. So that's those. Let's have a quick look at. So this is our AA, which is what we watch aluminium on. That's Alcoa. You can see that's finally getting to where it may be a buy. 47. Now this is why I caution on oil and gas taking profit. $98 to $49. Nearly 50%. And who cares? Like, we had some and we got out, I think, 88, 91, somewhere in there. Yes, it went higher, but who cares, right? You've made a good profit. And guess what? If you still have it, we call it jihadi trading, right? You can know how to get in, you can't get out. And I think you got that patented now, right, Madame? So that's what that is. So look at that. Beware of that. Wheat. Pit Boss he covers all this for us, but he was saying what's going on here. So go read those articles on the site, but you can see it's dead between this channel and beans. Same thing, it did that false break up here, and it came down to test tanking, and we're right in believe that. So that's your two levels right there, and the other one is corn, of course. Corn is the stronger of the lot from this pattern. You can see ABC. If that accelerates, breaks this little channel here, that would give that a chance to actually continue higher. Same pattern. You notice on all these commodities. Keep that in mind if you're an oil trader. Okay, stocks, or bonds we should look at. So bonds today rallied, right? So yields down, bonds off. You can see all that, and that's a lot to do with. So this is benchmark 10. And you can see at the end of the day what's happened. So remember, this means this going up, yields going down, right? So there we go. See how yields have fallen all the way from 348, 320. I go, why is that? Why is that? Oh, we raised rates. Well, that's built into it, right? Remember that little long trade we did yesterday was because we saw this starting. It's all rates. And look at accelerate. But today, it went the other way. Why? Because this is more safe haven. Right? And, the other thing, we ran out of buyers. Think about it that way yesterday. Tesla was one that was bearish today. And we'll look at this on a 5-minute. The reason was, and this was another bear plug, I guess, for the SPOOs. And this is, remember our thesis, short GM and short Ford, same sort of stuff. Lack of demand, EV cost. And to give you an idea of that, the reason this happened on Tesla, it's about $60 right there. Actually, it gapped down from 704. So this fell nearly $100 from yesterday. Keep that in mind. These are big, big moves, right? That was because they're going to raise their prices across the board. Apple, one of our shorts, put plays from yesterday, closed here at 136, went all the way down to 129. Right. So, and here's the beauty: when you buy these puts, vol's cheaper when it's on a rally, right? And I think that's, well, one other one we want to look at will be after hours. We had Adobe. That's correct. So they had earnings. Anything else from Adobe? Let's put up Adobe. So Adobe beat earnings, but guided lower, and that's the key that you want to watch for, and it has been for a while. That's what matters, right? Looking forward, the past is the past. So this is today. Earnings came out around 364. We fell all the way to 340, so $24, and rallied back to 362. So remember, this is really thin low liquidity. We're down 353. So we're basically 50% of this move down, right now. We'll see. This will move tomorrow with the market, one would suspect, or any analyst upgrades and downgrades. But everything else is pretty well on song. The dribblers index, you can see that got hit right across the board. Another one that was kind of wacky, give you an idea of, just like Rev, this AERC, this actually opened at 17 and ran all the way to 22 before going down into 16, 17. So what's happening is a lot of day traders in rooms, they kind of isolate themselves. So that's why there's a lot of volume, and all they do is trade these in groups, and they hope some of them, they just hope they're not the guy caught. It's one that's hot, if it's a story. And we saw that with REV, right? It's not fundamental. So just be aware of that when you're getting into those. Anything else anyone would like to look at? No? Let me just check.
It's very violent today.
It wasn't violent at all, I thought.
At the end, what I was going to say is at the end, it was almost the full going short and playing directional. It was kind of reacted by the market with an upward trend right at the
Are you talking about the last 10 minutes?
Yeah, the last 10 minutes into the after-hours.
So just remember, the punters and dribblers, the last 10 minutes is called market on close. That's where a lot of automatic orders are done. So you'll get massive selling or buying. Today it said it was selling, but it acted like it was buying. So usually what happens, because you all know it's going to happen, the reverse out goes the program. So if they're to sell, they'll automatically buy, and that's what fueled that buy at the end there. So again, it was down at -2/8 and all that. So you knew it was oversold, and then you had that. So once the market on close buy or sell's done, it'll go that way with it, and then we'll reverse that way. Because it's basically just a lot of funds buy 15 minutes into the open to 25 minutes, whatever their rule is, and they close in that 10-minute space. So that's why you get a lot of volatility in that first 15 to 25 minutes, and then at the close.
That was pretty crazy.
But that's every day.
Yeah. Usually if it's selling off, it'll kind of follow the direction of what it's saying, or...
Well, people take their profits, right? Tomorrow's a massive expiration for options.
So what would be the best explanation as to why?
What?
When all day long it was negative.
Because it was a piece of shit, everything I've just talked about.
So it's all like machines.
No. I mean, behind machines is real money, right? I mean, machines is all the ins and outs, and so the reason Nova Wave works, and what we do works, is because it's maths, and it's all probability. So there's two types of algos. There's news ones, right, and there's ones based on some type of system, and AI neurological, but they're all basically math related. So that's when things get really overbought or sold. That's why I'm proactive, right? I'm buying on those levels. I don't wait to see what happens. 85% of breaks fail. So everything's mathematical. So down there, a lot of people wait to see what it's going to do. So market on close, a lot of people out of habit wait, but generally those who do that are just scalpers, like one of our mates, right? That's all he seems to trade. The real money is the bigger moves. That's why you sell +2/8. Perfect well, buy it back at -2/8. So what happened today? It's more what happened yesterday. Very simple. Raise rates 3/4. Everything's crushed. The only buyers, as I said, was the big guys were out. Liquidity, they're all dribblers. They're all retail kind of mindset. Hey, this can't go down. I got to buy it. I got to average. Runs into it. You had all these central banks we all knew were going to raise. The only one that was more than expected was Swiss National Bank. Somehow they don't know that's happening. Then you get constant bad data. You have weak Philly Fed. You had disastrous bloody housing. You had mortgage rates at 2008 level. US is a consumer economy obsessed with owning houses. I mean, do you want me to go on?
No, I just...
But most people don't want to look at that because they're sitting going red, green, red, green, red, green. Those people never make it. They're dead. But you know what they do? They give people like me and a lot of others just constant liquidity, right? I mean, it's really that simple. That's why 85% on a good, they say it's 85, I reckon it's higher, lose. Yeah. Because, I mean, if you don't have a strategy, you don't know when to go out, you don't know when to sit on your hands. How many trades did I do today?
I'm not sure.
Well, what you know roughly. What's your guess?
Probably a dozen.
Wow, I didn't do that many. So the point is, I've already short. I added some on the Swiss stuff, right? But we have a plan. I think there was oil was a news-related stuff. And Natty, same sort of thing because it's EIA. But as a general rule, you've already got them, or ones you've missed out and they're too low or too high, right? But the point is you want to be... this game is all about mental. The more you frustrate yourself, the more you get flustered, which comes from a lot of trading, and with the more difficult it gets, right? Now, the reason a machine works, he can do all those trades, but he has no emotion. And so there's machines that most machines trade for one lot and they're constantly in and out, right? Or they may do a little bit, but they can't do too much because there's so many machines and they all go back into the line, right? So you can have 5 lots and you're a machine and not be able to get them all or not be able to get out of them all. So most machines lose money. Same thing, right? And liquidity's getting thinner and thinner. And most of these machines are buying spreads too. They pay across. So you know in NQs it's a lot higher than, say, S&P, the spread, right?
It just got me off because I had shorts pretty much all day. And then right at the end, they all ran against me. So I'm still holding them.
But they didn't. I mean, you're still way up, right? They did. I mean, that's going to happen. And that's the hard thing. Well, so we did a few buys. We can buy, well, vol's up a little bit, but that's the other thing, people. If you got a position in futures you want to maintain on a swing basis, you can protect it with calls on the spider or on ES. It depends on your margin. So if it's ES, it's going to go again. It's going to help you out because it's the same instrument. Spider's different because that's based on SPX, and you actually have SPY. Positions. Like yesterday, for example, to make against the short, or the day before, bought Boeing against it because that was the stock that was really running. It was in the index, remember? Does that, or you can trade the short term looking to put it back on your length. That's basically what I do. Or something and there were some stocks, for example, Madavi did where so kept his position on, but they were running against it, and she did really good on some longs there, like that ADN and what was the other one? I can't remember. But so that way it keeps your hands off the wheel. What did Jim Morrison say? Keep your eyes on the road and your hands off the wheel. So you're keeping your eyes on it, but you're actually going in somewhere else. So if you are wrong, you should be covered up on the other way. You know, you see, you can never assume. So here's the reality with markets or anything in life. You got to assume in perfect transfer of knowledge. Everyone's seen the same things, but somehow everyone thinks they're better than everyone else. So that's why I just go pure month. And most people are panicked. Most people, they're sheep. What would Billy Butcher say, right?
Yeah.
So, all those things are tough, though. Like, we got a good mate of ours that no matter what we say, he'll go to the riskiest bloody thing there is, right? And then wonder why when it shits against him, right? So that's your typical market, though. A lot of people gamble rather than trade. I'd say the majority, but they don't even realise it. They want that instant gratification, and that's why most people get out for small winners and hold big losses, right? It's all simple human psychology.
Well, you know what's funny is you hold a short position, and in it, 2 days, it goes, takes these one, trips down, and all of a sudden there's, which makes no sense, that trip. You start hearing say it's like,
you're cutting out there, mate. Sorry.
Market's finding a bottom, and you start. I got to be cautious about it.
Well, just think of what goes on. Most people only trade long from the stock market because that's their retirement and all that, and they hate shorts and they gloat if shorts loses. Look how many in these little rooms, or a lot of the dribblers. We know enough dribblers that all they try to do is have other people lose money. Oh, they're shorting. Then. So the only reason you buy a stock, because the market may be shorter, then you're in absolute dead shit, and you'll lose all your money eventually, right? Because there's a reason why they're short, and it'll work sometimes, but then you need a bit more to do that, right? Because then it just becomes a Ponzi or pass a parcel. So that's why we have these vicious ones, and they all want to buy. Well, the other reason is it's a lot cheaper to buy. The margins are cheaper. Everything's set up for you to be long. It's kind of a game or a con, whatever.
Well,
everything's designed in the market.
You need buying power.
Yeah, so
you go short, you're paying 100%. You go long, 25%.
So all that's set up to make it harder for you to be a shorter. Look at some of the good shorts I've had to get out of. I mean, I guess you could have kept them, but they'd put the fees up so much, 70%, 50%, You don't get that on the long side. And all they talk about on the dribbler shows, like CNBC, is length. And look at that, like the dribbler we had in here for a while, and that are out there on the Twitter. All they talk about is length and investments. Investment is also shorting. That's part of management, right? If you know what you're doing. So all these people are just conditioned just to buy and average and not take losses, and they're never wrong either, right? They just go, oh, well, this is now an investment. But, sir, your stock's delisted. Oh, it'll come back on. Oh, okay. That's what you talk. I mean, so that's what also makes it good for us. That's why, and I mentioned that yesterday, the big moves in Fed nearly always come the day after, be it long or short. It's because the big blokes are out. Why are they out? Because they know that the spreads widen. No one has a position around the number, right? So that's why most of the big moves happen 2 days before. But then if it rallies up and it's a bear market, they're going to be the seller, right? So they're selling, not looking to buy back, and all the ones that bought yesterday are either going to get caught like it was a gap down today, or they're going to be, usually what happens, if that gap down didn't happen then, it's sold all day, they're probably buying more at the open, and then they get whacked, right? So what's interesting is the vol tells you they're still not scared, which is mind-boggling when all the news is negative. So usually when the news is negative, we would be 36 to 40, right? At least one spike. But you're seeing that, and the moment S&P just bounces 20 cents, something like that, right? Or 80 in the the Qs, then vol just collapses almost immediately, And the bonds are running the show anyway, and the currencies, like I've been saying, This was all Swiss franc. The last days before it was all dollar yen. And that's all happening before it. It's all happening before it. That's where the good traders are. Like, the real sharp ones. And
I think this year is going to be really outrageous, some of these guys, pretty soon here.
Yeah, I mean, they got to load the depends, yeah. I mean, but for what we're doing, it makes it harder because you got to protect yourself. But that actually, I prefer that because it keeps you on edge and keeps you disciplined. You don't want to get in the pattern where if it just goes down all the day or up all the... So in the bull market, just goes up all the time. So people that have only seen that, right, just think you can buy. Well, before all that big bull run 4 years ago, it was down, or whatever years, it was down for 3 or 4 years all the time. So there's all these people thought you could just sell and hold it, right? And that fueled it going up, and now we got the same thing going down. And so with commodities, the rubber meets the road. It's real, right? This isn't real, a lot of stock market shit. You can see this with Revlon. So oil, you use it. Natural gas, you use it. Copper, you use it. Gold, you use it, etc. So at the end, there's an old saying, the rubber always meets the road, right? So with that, that's what's coming from that background stops me buying some of this crap in stocks, right? But that makes it a little... So there's different... It's what you're used to and what you expect can distort you in different markets too. Like a bond trader guy usually doesn't do well in stocks because they're so... really conservative, really, because it's all about bonds. It's just so different, right? And I don't mean politically. I mean conservative, discipline, that sort of thing. Like, could you imagine a mate of ours, and you know I'm talking about, trading bonds? It's massive size there, and the points are worth a lot. Or Natty or something like that. Him and Natty would be, I would have the stopwatch out, and it'd be like that video, go. Done. It'll be almost like that. So there's different markets for different... I mean, like anything, investors, trader mentality, right? Punters love these sort of stuff, like some of these stock market stuff. Like this AARC that we got up, that's a punter's dream, right? Look at these moves. But eventually you can get caught. Now, a dribbler's going to be buying this up here. He finally says, you know what, it's a good company, I'm going to own this. So it's $22. You know what I mean? So all those people make up a market. And even when you know it all, every now and then we'll get run over too, because there's always someone bigger, or you might miss a news story, or you just get tired, you give up your discipline. There's plenty of reasons. That's why I use a system to keep my mind in check. And we do get and that's why I'm always pretty intense but relaxed. So you know how my trigger twitch.
Oh, you're the most relaxed guy I ever met, for sure.
No, but I am relaxed. But then when I'm not, you missed that's what I meant. What I was saying is I'm easy to, I get, because you're watching this so hard, I can get fired up a little bit too easily.
Did you ever have any kind of like old...
old what, mate?
He's saying, did you have any...
Hang on, you're cutting out. You start laughing. Did you have any...
Oh, you said any of your co-workers committed any suicide?
No suicide, few broken jaws. Few... No, not that I know. Why do you say suicides?
You know, because you scold them to death.
Yeah, trigger gets...
Oh, mate, got it hard but fair.
When you do it mate's way, it is done. They're done. They're off the island.
So here's the reality. I just friend the belief. I'm a very big believer, as you know, that the discipline, you got to have discipline, and that's why I guess from the sports side of things, the discipline that comes with that, intolerance is you give it a little bit of rope, but at the end of the day, you know they're done. So compare it. If you're on a football field and a bloke isn't going to make his tackle or whatever, it's the same sort of thing, right? Or if you're, a boxer and you let down your guard a few times, you know what I mean? So the trouble is people think, so that's why I try to make it different.
Made an inverted, scared the hell out of them.
So if in this game, this is why I go on about trading versus gambling and dribblers versus traders, investors and traders It's really just a time frame thing and a homework. Punting, at least if you're a punter, you know what you're doing. You admit what you're punting and you're going to trade accordingly, right? You're not going to put it all on red and green. But a lot of these dribblers, they know it all, or they got no money, or they're trying to do something else. But they're the worst of the lot, and they don't treat it. If you don't treat this as like something that's lethal, which it can be, right? Then you're on a hiding to nothing. It's just pure.
Well, I know a guy that basically writes a new book chapter. He's called the Jihadi Trader.
We mentioned that earlier, yeah.
And he does things that, man, makes you a believer.
But so I don't know if all that helps, but you got to be cruel to be kind. That was a great song, by the way, back in the day.
Which one?
You got to be cruel to be kind, like something like
that.
You
got to be cool.
We all know it. I think it's cool to be kind, but it's got to be cruel to be kind, right?
Oh, cruel for sure, man.
Yeah. No. You yell at someone one time.
Oh yeah.
But but it ain't for everyone. But I come from that school that if you can't. If you're gonna get in a fire, you may as well learn it the hard way, straight up, and be on edge. And you either survive that, and then you'll go on, or you don't, and it'd save you a lot of money. Because you see, at the end of the day, it's just money. It's not your life. But you want to treat it with respect, right? So I see people cry and whine over shit they shouldn't have done anyway. Always blame someone. You see that all the time. We always see it. It's always someone. Dude, we got a president that does that, for God's sake. Let alone a day trader.
Anybody by any chance, since
Huh?
I got some guests.
You got some what?
I need an extra sea leaf for my guests.
Oh! I think you got enough. I think you got the soft top going, mate. Well, anyway, we did dribble on there at the end. So tomorrow you got there is a few things out tomorrow. I think it's industrial production and what always comes out with that, capacity utilization. There's going to be a lot of follow through in Europe over their emergency. It's just nutty what's going on over there. I mean, and Roman summed it up perfectly. They're going to be running QT and QE at the same time.
Bro, they're going
effectively,
back to
right? I mean, because what they're doing to try and maintain this whole European experiment, the countries that don't work versus the countries that do. Right. I mean, how does that work? So it's going to be interesting to mess. The what?
I wonder if Biden's going to help them rub those sticks together and get some heat.
Well, I actually think that Biden doesn't understand the serious, or Biden being him and the energy policy, whoever
You
runs
understand, the lights might be on, but I don't think anybody's...
Well, what I was going to talk about was the energy situation, right? Well, we knew that when he did the LNG thing, but yeah. So anyway, punters and dribblers, hope you got something out of that. Watch your levels. Watch your
talk some smack.
And it's going to be tomorrow. I would expect to be pretty volatile in certain names because of all the options expiring, right? And then you got a weekend coming up, and there we are, middle of the month, gone. And here's one thing we talked about a bit today. When I don't know when it was, a few weeks ago, but when the S&P first did the magical 20% and all the magazine, it's bear market, it rallied from there 3 or 4, 5%. I don't know, maybe more, maybe 8%. So the Dow's the only one left. So the moment that hits that 20%, they're going to do the same thing. So sometimes it's buy the rumor, sell the fact. That's all I'm saying, being aware of. The Dow's only 30 stocks. I know it doesn't have the same impact as the S&P 500 or the 100 in the Nasdaq, but just keep that in mind to that. Be sensible, be smart. Rock and roll, never die. What other words of wisdom you got?
Mate, let me tell you, I learned one thing in trading, and if you want to get people out of a crowded theater, you yell fire.
Same impact as
you want to get the stock market going down, yell high inflation, recession, and raising the Fed is going to be hawkish. Those are recipes that have never failed time to time.
Well, that's what that was what was bizarre. So if you went from the trading world and you saw yesterday's reaction, you had two reactions when you saw the move yesterday. The way they bought it up. But so first thing you go, what the hell? Why is that going up? They just raised rates. It's all dumb. If you've been around long enough, you know, well, people are stupid or greedy and they're scared of missing out. So greed and fear is that. It also meant the market was really oversold, but obviously got overbought pretty bloody quick, looking at today's attitude. So liquidity is really weak right now, right?
So they raise these interest rates, right? So the money, people have to pay more for interest, right? Where does that money go? So we're just getting the banks richer?
Exactamundo, my friend. Jamie Dimon might get his bonus after all.
And that's not inflation. Pig just gets bigger.
Yeah. So the rich get richer, the poor get the picture. Read about it.
So the real stuff is to take the money out of the people who are not so rich. That's what they're doing, basically.
100%. People you voted for. Look at half the middle working class. Yeah.
I voted for that singer. What was his name? Kanye West.
Well, it doesn't matter who you voted for. They all do the same thing. Other than Kanye.
I don't think Kanye West doesn't even know about this stuff.
I don't think Kanye knows what he... I mean, look at he's doing... I mean, he's the one married... just look what he married to. Come on, buddy. Come on, buddy.
Who knows?
But Kanye isn't the most sane person at the best of times, right?
Yeah, he's got a couple. Well, I think he thinks clearer than Biden.
Maybe. But what I was trying to say is it doesn't really matter who's in this. The interest rate.
Anyway, all the Fed's doing. Hank said it really good in his song. Interest is up, stock market's down, and you're getting mugged. You know when you go downtown.
Oh yeah. Well, here's another thing I just want to point out. So all the Fed's doing, the interest rates are already up. The bond market took it up because credit's been squeezed. So they all blame Powell. Dude, he's giving it every freaking chance and finally has to catch up with the bond market. So you go over the last 3 or 4 years. The bond market's done this a bunch of times and it's come back up. This time the Fed had to raise purely because the public and the president said they got to. Because the perception is, the reality is, everyone's already screwed for money because of the high prices. And Powell was saying that I can't do anything, it's cycle. But because rates went up, here's the other reason he raised, right? For the reason you just said.
I'm going to expose the big lie.
Which is where there's many big lies in finance.
No. This is one they talk about on TV, and they're like, "Hey, can we avoid a recession?" Let me give you the news right now. There's never been a time where the Fed's raising interest rate we haven't gotten in a recession. Look it up. Never. So when these guys tell you on TV, maybe we'll avoid the recession this time around. All right.
Oh, that wasn't the Fed. That's your president. But
no. That's what they say on CNBC every day. Can we avoid it? Even Powell says, "Well, we're going to try to get a soft landing." So
he's not saying. Yeah, he's saying you can't. And he's always. So here's the other reason they raise rates. So just think about this. So the banks are making this money, right? Because they're still charging you these high. So immediately yesterday when it raised, bang, bang, they all raised their prime rate. So the reason they've got to raise their money, think about this. When it's at 0 or 0.25%, these banks are borrowing from the Fed 0.25%. Not you or I, right? And they're lending it to us punters and dribblers of 5%, 6%, 17%.
Yeah, but it was at 0% for a lot of time too.
No, I know, but but hang on, it's the banks paying that.
Yeah.
So by the Fed raising rates, they're also trying to close that gap, right? But the moment, here's the bullshit about the whole myth. The moment they raise it, the bank raises theirs. So but the trouble is they sell the game that the only way to fight inflation is raising rates. Well, inflation means I'm paying more money for something. I'm already paying. Go fill your car up. Go to the store. Eggs are double. Bread, I don't know about bread, but milk's up a third.
Oh, yeah. I'm gonna tell you. They don't tell you the truth about it. Something. When you're a little kid, your dad had to tell you about the birds and the bees. Here's a true story about the banks and the Feds.
The same people.
The money when they say inflation, they're basically saying is the poor or middle class of the society is spending too much money and causing everything else to go up because they finally get to enjoy life for a minute, So we got to make them poor. So we're gonna get you to lose your job, pay more money for everything until you guys are all broke and we're in a recession. You guys are begging us for money.
Well, let's look at it another way. So that's why I just mentioned that gap. So the U.S. Federal Reserve is very different to the Bank of England or the Reserve Bank of Australia, or those banks are all owned by the people or the government. The Federal Reserve is owned by individual banks. It's a private institution. So this is true. It's not. There's plenty of conspiracies about it. So to answer your question, it's the same person, right?
Yeah.
It's all a charade. It's all a charade.
Because he was on that train when they formed the Fed. Chase was on there, and I don't know.
They went to the island, Jekyll Island.
Nova was on there, I think. Something like that.
Yeah, Jekyll Island. But so anyway, so you got all that. That's why they bailed out them. They bailed out themselves in 2008, and they threw Lehman and Bear Stearns were the two wolves. Not a wolves, sheep, whatever.
Look who gets hired to be a Fed, too. That kind of tells you who's behind.
Yeah, I mean, this is the first time Powell's actually, I'm sure there's others, but since we've been around, he's actually from the public sector. He's actually worked. Most of them are just bureaucrats, like Bernanke.
That's why I think
Yellen.
He knows what happens to people, and I think that's why he's hesitating to really raise it, because he knows that.
And that's what like a mate of ours, he's the worst Fed president I've ever seen. Well, I don't know.
He's the only one with a heart, I think.
Yeah. So that's the other thing. Be careful if you think like that, because that'll affect the way you trade. You'll get. So that's the other reason to answer Johnny's question was the reason I do the discipline is to stop me having emotion the best I can, right?
Yes.
And so I take out my emotion on Johnny sometimes, scolding him. But hey, he's mad at that. His wife's mad at that, apparently, right? Is that what you're saying? Are you there? No, you were talking about you're talking about scolding earlier.
Oh yeah.
Well,
are you done?
The old Billy Butcher.
Scolding.
Yeah. The old Billy Butcher moves. So.
Oh yeah. Are we still on or?
Yeah. We're still on. So anyway, we've dribbled on. We forgot we were still recording. So we are going to shove up shop. Remember, if you like us, like what you're hearing, and find it helpful, you can cut out the last 20 minutes of dribble.
Enjoy your day.
Share us. Share us.
Financial freedoms.
Subscribe, share it, and all that. Thanks for listening. Send us questions. And we will see you later. Bye now. Be good out there. Be careful.